JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 16th of September 2020. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So jumping into the charts now, a quick update here on what's happening with Nikkei. To be honest, as I've mentioned this one, I talked about Nikkei yesterday, and the same idea here remains in play. It's stuck here. It closed slightly in the positive territory, but it's still stuck in between these two levels, the 23,339 level that I talked about previously, which marks the high, marks the high of the 14th of August, and the stuck below the 23,580 territory, which, as you can see, continues to provide decent resistance. That's, by the way, the current highest point of September. So in a way, we need to see a nice good break above that in order to aim for some higher levels, guys. So keep your eyes on that one. Shanghai Composite, quick update here as well. So this is exactly what I was talking about previously, that in a way all this area here could be a bit of a seen as a resistance, because we are still trading below this 21-day EMA. So in a way everything kind of is still kind of leaning towards the downside a little bit here on this particular index, but if it suddenly pops back above this 21-day EMA and above this 3,336 territory, then yes, we could consider a move higher. Until then, as long as it stays below this 21-day EMA, there is still a chance for this one to move to the downside, so be very careful for now. Now jumping into the German DAX, and not much has changed here, to be honest. The index still remains below this barrier, this 13,314 level that I spoke about previously, and at the same time above this 21-day EMA, shown as the yellow line. So the idea that I was talking about on Monday here is that in a way, overall, yes, we are still within a rising wedge here, which of course, according to all the TIA rules, tends to break to the downside. But until we get that break here of this lower side of the wedge, we cannot really discuss this downside scenario. The only thing that we can discuss is a move within this formation, and at the moment it's to the upside. So however, to be a little bit more on the safe side, as I've talked about before, we need that nice good daily close above this 13,314 zone, and then yes, we could maybe aim for slightly higher levels. You can see that we do have the bodies of the candles, these candles here, these daily candles, above this barrier. However, this is where we had the opening. This is where it opened up in the morning, but then I ended up closing the day well in the red. So basically, that's not really something that we're looking here for. We're looking for a nice good close above this area, and then yes, we could maybe aim for a nice push higher. Currently the price is balancing not far from yesterday's close. At the moment it's sitting at around 13,211, sitting at 13,211 1110 zone on the cash index. So again, for now, this idea that I've mentioned to you previously in my previous videos, yep, still remains on the table. Now jumping into gold, and yesterday gold, after testing this this downside resistance line taken from the high of the 18th of August, it sold off, as you can see, and closed the day in the red. However, remained above this medium-term upside support line taken from the low of the 20th of March. Now, as I mentioned to you guys previously, that as long as it's going to stay in here and between these two lines, we're not really doing anything, we're just observing here. But if eventually it does pop, for example, above this 1966 territory, somewhere around here, or even actually better, let's grab the high of yesterday just to be on the safe side, this 1972 mark. If it pops above it, then well, yep, we could consider maybe a further push north. However, if it starts breaking this this upside support line, now this is where more sellers could be joining in and pushing this one lower. Although the more comfortable level for me here is this 1901 territory, so a nice drop below it, yep, could open the door towards further declines. Until then, all this area here, yes, we could, like I said, on a break of this upside line, we could consider a move lower, but it still would be a bit of a tricky one. So again, if you're more on the cautious side, you could wait for a drop below this 1901 territory and then aim for some lower levels. Now, jumping into WTI oil, now here it's a little bit annoying, I would say. It just fell shy from a few points of reaching this this 23.6% retracement on the Fibonacci. However, don't get me wrong, I'm still gonna keep that in mind, especially if the commodity struggles to get back and to get past this 38.74 level, which is marked by the low the 30th of July. Now, if we do get a nice move above it, this may also place the price above the 100-day EMA. Of course, there will be some other EMAs to overcome, but yeah, it could be the first step towards higher levels. However, I mean, preferably, of course, we would like to see maybe a push above this 43.75 zone in order to get a little bit more excited about higher levels. But if it doesn't, excuse me, if it doesn't, then well, it could be ranging here for quite a while. But at the moment, from the short-term perspective, how we could look at this is, if we keep an eye on this low here, the low the 30th of July near the 38.74 zone, and this 100-day EMA as well. If this area does provide resistance, then we could see another round of selling. If you're more on the cautious side, wait for a drop below this 36.15 level marked by the low of last week, and then aim for lower areas. Jumping into Ripple, quick update here, not much is happening, but still the same idea remains on the table. Now, I looked at Ripple recently, and what I was saying that yes, at the moment, I mean, after it kind of took a dive here in the beginning of September, it started like moving sideways a little bit, but it's struggling to overcome this low, the 27th of August near the 0.2550 territory. And as you can see, it tested that area perfectly and reversed back down. Currently, it's sitting near this highest point of April, near the 0.2357. But as I mentioned to you guys previously, that if this area gets broken, and this would also place the price below the 200-day EMA and kind of increase the chances for this one to drift further south. However, this move still could be seen as a temporary correction as long as this upside support line taken from the low of the 13th of March remains intact. Now, if this upside line gets broken, now this is a different story, of course. We could start looking at much lower levels, but at the moment, yet even if we see a bit of a decline here, still it could be seen as a temporary correction. If the crypto decides not to go below this 200-day EMA and instead pushes above the 0.2550 territory, then yep, great news for the buyers. We could see this one pushing a little bit higher. However, in that scenario, probably just out of safety, keep your eyes on this little short-term tentative downside resistance line. Now, I'm not saying that this could hold the price down, but or should I say will hold the price down, but it could do so. So yeah, we're taking trying to take everything into account for now in order to protect ourselves. So, but again, like I said, guys, for now we keep an eye on these two levels: the 0.2550 on the upside and the 0.2357 on the downside. Jumping into a few pairs, AUD and ZD. Quick update here, and look at what's happening here. So yesterday I talked about this one, and we were having a nice rebound from this upside support line taken from the low of the 18th of March, and now you can see that the pair yesterday did try to move higher, but as you can see, the daily candle here eventually ended up being below the 21-day EMA, which now is kind of causing a few issues here for the bulls, and in a way that it could open the door towards lower levels, especially if it breaks this upside line, and if it let's say drops below the low of the current lowest point of September near the 1.0816 level, and a nice drop below this would confirm a forthcoming lower low, and yep, further declines could be possible, guys. So for now we're watching this one carefully, and let's see how all this is going to play out. Now NZD CAD here, you can see I talked about this one yesterday in my Traders Tea Time, and also I've mentioned it's a nice bullish formation here. The pair seems to be willing to travel further north. However, as I mentioned to you guys previously, that preferably a nice good break and a daily candle kind of staying above this 0.8868 level could do the trick for more buyers, and we could see this one traveling further north. But at the moment it's still stuck here near this level, so we'll be very carefully, but as I said, it's showing willingness to drive higher, and well, let's see if the bulls will have enough steam to do that. In terms of the downside here, of course, given that we are trading above a few of these upside lines, in the more of a medium term, from the more of a medium term perspective, yes, preferably a breakthrough both of these lines could do the trick for more sellers. But from the short term perspective, what you could do here is keep your eyes on, of course, this level right here, the low of the 8th of September, or in other words, the lowest point of September. But what you could also do is keep your eyes on this little inside swing high near the 0.8818 level. A nice good drop below it may open the door towards lower areas. So for now, keep your eyes on these two levels. USD JPY is very close to this key support zone near the 105.30 zone. I spoke about this yesterday and recently as well. Basically, we need that nice good strong confirmation move below this area. Ideally, we'd like to see maybe a daily candle staying below this area, of course, as well. But if we get a nice strong move below this territory, then yes, lower levels could be met, and at least we could drive this one towards the 104.19 zone marked by the lowest point of July, and then we would take it from there. So probably, let me just adjust this arrow. That's how it's gonna look if we get a nice good strong move below this 105.30 territory. GBP JPY, I've also mentioned this one yesterday, just a quick update. Yesterday I was saying that we're watching this little kind of consolidation area here, a bit of sideways activity, I would say, and for now, the fact that it's still trading below this upside support line taken from the low of the 18th of May, of course, that creates a bit of bearishness. But just to be on the safe side, guys, preferably a drop below this 135.45 level could do the trick for more sellers. Until then, we're just observing the price action here, and we're not doing anything. In terms of the upside, preferably a pushback above this upside line, and a pushback above the 200-day EMA could maybe open the door towards higher levels again. But the more comfortable level is still this 138.25 territory marked near the low of the 24th of August. But it's a bit of a still a bit of a far way to go. At the moment, we're keeping an eye on this 135.45 zone. Let's see if that gets broken. And finally, EURUSD. So EURUSD is declining a little bit. Now, yesterday I spoke about this, and I was telling you to be a little bit careful here. Now, if by any chance this pair decides to drop below the 21-day EMA, breaks this upside support line taken from the low the 14th of May, and then also drops below this 1.1753 territory. Now this is where it could become very, very interesting for the sellers, because we did have already a nice move to the upside here starting from around mid-May, and yep, you can see throughout the whole summer the pair was moving higher. So let's see if this can correct a little bit lower. However, at the moment we cannot talk about any correction because we don't have these breaks. So at the moment it's still to the upside, as long as this upside line remains intact. Yep, the short term, at least the short term scenario, will be to the upside. So that's why, guys, don't kind of rush into anything yet. What you could do here, and now previously I talked about this 1.1965 territory, but probably we can adjust this now a little bit and keep our eyes on the high of the 10th of September here near the 1.1917 level. So just to be a little bit more on the safe side. So a nice good push above it may open the door towards that psychological 120 zone, and then yep, we could take it from there. But for now, it's, like I said, it's very close to this 21-day EMA. It's very close to, again, very close to the upside support line. Our oscillators here are showing a bit of a losing speed here, are showing a fall in the speed of the price here, but of course, like I said, at the moment, the guys, still this upside line remains intact. If that gets broken now, this would be a different story, and especially if the rate also falls below the 1.1753 territory. So keep your eyes on that one. So guys, I really hope you found it useful. Thank you very much for watching and listening. If you want to catch my video later on, my traders tea time, as always, 13:15 GMT. But for now, guys, I hope you have a wonderful trading day. Stay safe, don't overtrade, be very careful, and yeah, I'll see you later. Thank you very much, and bye-bye.